Okay, everybody. Again, this is the Option Professor here. And what I'm going to be doing today is going over stocks, both domestic and international, growth and value, and then a sector that could be the next leader when we come out of whatever we're involved in here with the Fed hikes and all that kind of stuff. And so we're going to give you some different ideas on that. Quick background on myself. I've been doing this for over 40 years, and I've done option seminars throughout the country to thousands and thousands of people. And so obviously we have a certain amount of product knowledge and information to share, and that's what we're going to do here right now. So again, I'm just voicing my opinions and my observations. And of course, we are not giving out any advice on anything. That is supposed to be done through your brokerage firm because they know your suitability and risk tolerance, and we have absolutely no idea. So we're just explaining how we feel and our opinions as we see it. Okay, so here we go. On the S&P 500 again, we have the market, like I say, running into some resistance there. That's where we got a sell signal recently at 4208. So far, that sell signal has worked out handsomely. If we get above 4208, that would open the door to 4306, which is a 61% retracement of the move from the high of 4810 down to 3491. So that'll be an area that could happen if that occurs. And then, of course, drops under 4,000 and 3950 or 3900 would be substantially problematic, possibly. And again, if we do finally, after we've had inflation and after we have the Fed hikes, we finally do get a slowdown in growth and earnings, then of course you may have to have a reset of prices, and the reset of prices could be into that lower 3,000 area where the purple line is, where we hit it during that big crisis with COVID. And so that's why that still could be on the table, but not tomorrow. But again, I wouldn't forget about that because again, the intent of the Fed is to get stable pricing, and prices are hardly stable. And the unemployment rate generally will rise during this type of activity. And we are miles away of that as well. So again, not tomorrow, but if they are going to achieve price stability, the unemployment rate generally goes up and the earnings generally will go down. And that would mean a revaluation of stocks. So you keep that on the back burner. You don't fight the tape. You don't put in things premature, but keep in mind. Okay, let's talk about a couple of things here so we get to all the things I want to talk about. Okay, we have got a big turn this last year in October in the international stocks, okay? And I'm going to show you some of the different ones that we've liked and has been good to us. Okay, so I'm showing you the ETFs on some of these things. This is on Mexico. Mexico is going to benefit from the reshoring because, again, I guess they would rather have it south of the border than over with Mr. Xi and everything like that. So you can see this has given us a buy signal here at 35, and it continues. It did violate it down here, but held the blue line, and now it's back on the bicycle. Is it a little bit overextended? Let's take a look. This high had an RSI of 58. This high has an RSI of 62. So there's no divergence here. So again, pullbacks in Mexico still seem to be the reasonable thing to do. And it could have quite a bit of runway here because you can see it used to be up in the 75 area, 70 area. So there's Mexico. The other one we're looking at is Brazil. These are called developing markets, right? Developing markets. And Brazil is another one with a lot of natural resources that people need. And again, it's not really looking great yet. If we can get above this 35 to 40 lane, that's when we'd be more interested. So right now, Brazil doesn't look so good, but Mexico looks pretty good. How about things like China? In China, you've got the major ones at FXI. And let's take a look at what's going on there because they're having a pretty good day, I think, today over there. But again, this is a reversion to the mean type deal. Okay, this is what they call reversion to the mean. So obviously, look how far it's down here at 22. Okay, going back up here to 38 is still possible. Okay, but your RSI still looks pretty weak. So there's a possibility that people are getting a little too excited about the growth potential in China because their property market has still got most of their citizens underwater, and they have a very significant unemployment problem, not to mention saber rattling. So, be a little bit careful. We've had a big run on it. Obviously, we liked it. I'll show you exactly where we liked it here. We liked it down here when it turned at 22, right? And we liked it, but it has peaked out a little bit here at 32. It is holding on to purple here. We'll have to see if it can bounce. But again, this is an example of why, when it goes up here and the RSI is 69, and then it makes a big new high, and there's not a huge move in the RSI, sometimes it's a situation where it'll roll over a bit for you. So on China, again, be a little bit careful. There could be obviously more to it, but you have to be careful that it's just a reversion rally. And at some point, the reality of their country is going to be problematic, and their growth is not going to be nearly as much as some people think. It's possible. Here we go on the web. This is their tech sector. Again, big move, still looking okay. But again, the purple comes in at 40. If you can start closing above 35 and 40, it would open the door for quite a bit of upside. So this is the tech sector, the internet sector, and that might be something a little bit more interesting. A couple of big stocks, they're going to be announcing earnings this week. You want to see BABA, and let's see what BABA does. BABA gave us a buy signal on the 1 year at a very good level. Obviously it's 65. Okay. Then it got sloppy. Then it got back on it. Right now, it seems like it's been in a sell mode since about 115. Okay. So, BABA, had a big move, and it's on the defensive right now. Getting above 105 would be nice. Again, getting above 110 would even be better. Okay. But right now it's definitely on the defensive, and the RSI didn't look very good. Okay, so there you got a little look at China, and another one that's coming out this week is Baidu. Baidu is supposedly getting in with the new technology, like Microsoft is getting involved in more, try to get Bing going and try to challenge Google for search. So again, Baidu looks like it's in a little bit better shape. I gave buy signals here at 80, another buy signal at 115. Again, the direction of the red line continues to be up. So until the red line starts pointing down, like it did back in 22 September, right before it tanked, be a little bit careful about being too negative. You have to stay under 147 on Baidu. And again, if they announce good earnings, and BABA does, they could get back on the bicycle. But right now, definitely it broke down. But again, the red line is not pointing down yet. So again, a little too early to get too negative on it right now. So that gives you a little taste of China. And let's talk about Europe. We were very big on the European banks because they were extremely low valuations. And so we thought they were quite good. Let's show you where we got the signal on that one. Back down here at 14, started to turn up. Again, the red line pretty much is going up. Yeah, it flattened out just a little bit. You jump right back in, and you're in there still. It's flattening out a little bit, so it's somewhat concerning. This is the financial ETF on European financial stocks. Again, the red line is starting to roll over a little bit. And so getting underneath and making this thing turn under 1984, 1972, that would start turning this thing down a little bit if it can get under 1950 and stay there. Otherwise, it could just be consolidating. A general European ETF is SPEU, and this will give you an idea of what the general ETF looks like. And again, you're looking at the market giving us a buy signal down here at 30 bucks, got a little sell signal right back in it. And now it's starting to flatten out here, pretty much like the financials, right? RSI still looks pretty good though. So that's why I'm saying is don't get to, until the red line starts turning down, a substantial decline generally doesn't occur. That's pretty much the way I see it. Okay, so be careful getting too negative on it if it does turn down. Again, the dollar has not been going down anymore. So that's been hurting these guys a little bit. And our yields have been rising. So again, those two things are a big factor as far as why Europe and internationals have definitely hit the pause button. The last one on the international is your emerging market. Although that is a lot of China, you do have some other markets in there with it. But let's take a look at the EM chart and see what that looks like. Again, if you look at the longer term graph on the EM, you are coming back towards resistance where the big 120 month moving average comes in. So again, this could be a reversion deal. I would say right now you need to get above 42 and 44 to open that door to these high numbers, which could very well happen. So keep an eye on those two numbers. I'd view 42 and 44 as big keys as far as getting back going. And right now it's trying to hold on to the 1 year, which is 39.85. Again, RSI is correcting back down to the 50 number. So this could be a buying opportunity if it can hold its water here. And then, of course, take out the point here, like right around 42 and change. But that's your emerging markets. Again, we look at ratios between US stocks and overseas markets, and they turned over, that ratio turned over for an extremely high level last year. So this could be a very big thing with a lot of runway. So that's why you got to keep an eye on international. Again, if we go into a recession or if they hike these rates high enough, all bets will be off. But if things were to come out okay with the hiking and the inflation stuff, then this thing, these things could have a very bright future to them because they are very much undervalued versus the US. And there has been a little rotation, obviously, into them already. But right now, it looks like reversion trade on all of them. Okay, so there's now on your domestic side, we watched the growth to value ratio, and we watch it very closely. Last year, we had a couple of switches, but mostly it was value. And the last time we had a switch of size was in June, but by August was right back to value. Okay, so, the last time we switched into growth, it only lasted for what? 2 months. Now we got another signal to go into growth in December. So January, February, that's 2 months. If this thing rolls over in March or April, then it'll be back to value for everybody. Value means lower PEs, means dividends, and obviously more free cash flow out of the company. Growth is going to be obviously your higher valuations, and obviously you're reinvesting money as opposed to distributing it. So right now, let's take a look at a couple of things here. This will be something for the growth sector, technology, XLK, and we'll show you basically what's going on here on that, on the 1 year. Okay, like I say, we got the buy signal in December. So right when it was turning here, we got the buy signal right around was it 124, and we've got a nice run. It seems to be coming off now because, again, yields are rising and so is the dollar, and that's what made it go. Lower yields and lower dollar. That's switched around a little bit, but the red line hasn't really turned down yet, and that's why we haven't gotten the signal that growth has lost its mojo. If this red line starts turning down, RSI is not under 50. So it's still got, it could just be backing and filling a little bit. So it's too early to tell. There is a presidential cycle that goes between the second year of the president, October, to the third year of the presidency, April. And it's a powerful cycle with a great history to it. And obviously this year it's worked dynamite. So, but we're running out of time on that too. We're going to be in March before you know it, and the cycle ends in April. And again, it doesn't always peak in April. It just is over by April. Okay, so we'll have to keep an eye on that. So we had a powerful cycle. We had a big drop in the dollar and a big drop in yields. That drop in the dollar is now not happening anymore, and the drop in yield is not happening anymore, and that's why the tech is not happening quite as much anymore. So we'll have to see how those two things pan out. Dollar goes back in the toilet, yields come way back down again, it's probably back on. These yields start going above 4%, that dollar goes above 105, 106 on the dollar index, then this stuff will probably have some trouble. But right now, too early to say. All we can say right now is having a pullback. Let's look at value. And we'll just look at an ETF on that too. Okay, again, this is where it peaked out here. Okay, the value did peak out here a little bit, and now it's on the defensive a little bit, but it has, it hasn't been bad. It's just that the growth has been better. It's holding on to the 50 number here. So again, you'd like it to, and then hit the purple down here. That was a great time to get in right there. If you're, looking at that, the purple line is the 120 month moving average, and it's not a bad one to, when it hits that, it's generally a pretty good time to look at something. Like you see here, it hit a high point around the purple, and that was about it for it. So again, keep an eye on the 120 month average. It's, in my view, our opinion, it's important. Okay, so there's your growth and your value. And again, right now it's been growth over value, but we'll have to see if that can sustain. There has been a little bit of a turn in the ratio, but nothing huge just yet. So if you get our updates, you'll be hearing more about that. Now let's talk about some specific stocks and see how they look. Because again, let's talk about travel. RCL, that's your Royal Cruise Line, I believe. And let's see, Royal Caribbean. Now, people are starting to travel, so some of these things have gotten on their bicycle again. See, we got the buy signal here at $50, and it's still riding it. Starting to come down a little bit, but that's a pretty good ride. If that thing starts turning down, we'd be more concerned. RSI, let's see if there's a divergence. You're at 75 on that high, and the next high you were at 75 again. So there's no big divergence there. Again, it could pull back obviously towards 65 if it really has a big correction. But the bottom line is it does look like people are traveling again. And that's the cruise line. How about the hotels? Marriott hotels? And Marriott Hotels, another one, again, got the buy signal at 150, went all the way up to 180. Now it looks like it's rolling over a little bit. Red line is kind of looking like it's turning down, but nothing big yet. And the RSI is still holding 50. So again, the hotels have had a big move. Let's see how the RSI worked here. You're in the 70, 68 area. On the new high, you were at 67. Not a divergence, but not a ringing endorsement either. The longer it stays under 175, the more that red line's going to turn down. So keep an eye at 175. It's an important number. Let's take a look at Hilton. These are the hotels that people are going to use, right? All right, so there you go. And on the hotels here, again, buy signal here, 125. Now we're getting a little bit of a break. Again, red line's not turning down yet, and RSI, I believe, is still above 50. So it's pretty much a ditto to the Marriott. And then, of course, when people go, they gamble. And that's why the MGM Grand owns a lot of hotels in Las Vegas. So we use that as a guide there. And if you look at the 20-year graph on it, we found this kind of interesting. The 20-year graph is actually looking like it's trying to break out. Again, it's getting a bit extended, but if it takes out 50, there is a lot of real estate ahead on this one too. So again, this one looks kind of interesting if you want to get exposure to the Las Vegas markets and some exposure to Macau. The big one for Macau, for us, and the one we have been very keen on since $35 a share, is Las Vegas Sands. They are big in Singapore and in Macau, and we got our signal right here at 35, 36. And it's been a ride. Now it looks like it might be rolling over because, again, people may be getting too excited about China and too excited about how many people are going to run around gambling all their money again. But we certainly felt at 36 that when everyone's locked down, nobody's gambling. And when they get unlocked, they're going to gamble like crazy because, again, the Chinese gambler is known throughout the world as a pretty big player. So there you go. On that's the way to play the ones over in Macau and Singapore as far as gaming is concerned. This week we have got some announcements coming up, but I did want to look at a couple of big stocks here for you and take a look. Tesla has had a big run. Question is will it continue, right? So we'll take a look at the graphs and see what it tells us. Okay, we have got on the 1-year graph, we've got Tesla hitting a high point and RSI was at what? 77. On the new high, RSI is at 66. That's a divergence. 70, 77 and then 66. That's a divergence. So there is some potential that is exhaustion at 220. And we'll have to see if it can do anything about it. Options. If you own this and you thought that it was getting exhausted and you were still bullish, you can go 20% out of the money, So that gives you still plenty of upside if it's going to keep going. That would give you something like a 265 strike. And then you'd get a premium on that. And then you could always, if it starts shrinking, buy back the one that shrunk and sell the lower one if it starts to roll over at all. Clearly getting underneath the number of 175 would be very negative for this in the short run, but RSI looks pretty strong. There is a gap here, so I would respect that, and that's around 260 to 265 area. So again, that's a neighborhood where it could gravitate to. So if you see it bust above 220 and you want to target, I would say that would not be an unreasonable target if it can get above 220. So that's the way we basically would see Tesla right now. Looking at Microsoft, that's another one that's had a big run, and it looked like it had some trouble around 280. So let's take a look at that. Okay, on Microsoft, again, you had a high point there on Microsoft. What was the RSI when it hit the high point? 62. If it came back down, 67. So that wasn't a problem. But again, it definitely has gone on the defensive here. And there is a gap up there that it was trying to fill maybe, and that comes in at around 282 to 285. So remember, gaps sometimes get filled. So if these things do get back on their bicycle, for Microsoft, that would be getting back above 265. Then if you wanted to see what a target could be, it could be that 285 neighborhood, which would be where that gap would get filled. So keep an eye on Microsoft and see if that could happen. Obviously up at 280, when you get this kind of run, if you start thinking it might be time, you can sell an out of the money call. If you go 20% above 280, you could have started your selling campaign with a strike price of something like 330 or 320, and that still gives you plenty of upside, but you start collecting cash. If you sell calls above and buy puts underneath, that's called a collar, and that gives you a upside limit on your stock and a downside floor. And a lot of people like that. The other thing is if you bought Microsoft at 220 and it runs all the way up to 275, again, that's something that you could use replacement trades. You take your $50 out of your pocket and you replace it with a call spread of 280 and 300 or something like that. And that puts you in a limited risk position. And then if it comes down like it did, the only thing you lose is the 280, 290, 300 spread, whatever you put on, and the rest of your money stays in your pocket. So again, sometimes the replacement trades are not bad to look into if you're trying to do risk management. Okay, I got to get to a couple of things real quick before I shut it down here. And it's going to be on stocks in the industrial sector that seem to be possibly the new leaders. First one is called Eaton Corp. Let's take a look at the 20-year graphs on these things and see if anything's going on. Again, there could be a switch in leadership as we come out of this, a little less tech, a little bit less high valuation, and a little bit more on industrials, where people in Europe and Japan and US start getting into this. So as you can see, this stuff looks like it might be taking off somewhere. Doesn't mean that this is the time to get in, but I certainly would keep an eye on this company. Because that's let me look at the 20-year graph and see. Yeah, see the 20-year graph? It's almost making all-time highs. So there's something to that. Next one up is PH, which is Parker Hannifin, PH. And again, on Parker Hannifin, you're looking at a 20-year graph that also is giving us some idea that this is where the money is rotating, right? That's 20-year graph, which means it's making a 20-year high as we speak. Not exactly the most popular stocks, are they? But they could be popular over time if that's the way the world is going. The next one is Illinois Tool Work. And if you look at this one here, again, another one looks like it's trying to take out all-time highs. So there's something going on there. And then finally, CMI, which is Cummins. CMI. And Cummins. And this is another one. We're looking at 20-year graphs, so it gives you a little perspective. Something is happening with these things, right? And there you go. So this one's also trying to challenge its all-time high. Okay, I have been trying to go over a few different things for you, including the domestic and international stocks, growth versus value, and obviously there's a lot more to cover. You may have questions. You may want to know more of what we're watching and what we're doing. And so basically you go to optionprofessor.com. OPTION, professor.com. You submit your information, and then I will speak to you, explain some of the things that we can do. If you have questions you'd like to ask, obviously more than happy to ask them, to answer them with the best of our opinion. Okay, so go to the website, put in your information. I'll look forward to explaining what we can do for you. And again, I think there's some obviously areas to help, not only on stocks and options, but timing and other markets as well. Again, we'll talk to you when you send that information in on contacting you. And until then, of course, we wish you all the best of trading and the best of luck. And again, we'll be back with you again. Thanks a lot for listening.